And here we have a knowledgeable gang that I let everybody to introduce themselves so that I don't do any mistakes here.
Hi, my name is Jonny Fry, CEO of a company called TeamBlockchain that's been helping a number of private and public companies look at the challenges and opportunities of blockchain as a technology, but also looking at how they use crypto assets, or not, as the case may be.
Hello everyone, I'm Tomer. I think I found for the first time Ransu someone who has a longer last name than me. That's a challenge. Yes, I'm a founder of 2030 and Pillar, the Pillar project. Pillar project is a universal wallet turned into your personal data locker. It's changing the way data is owned and exchanged and consumed. We've launched a pretty big ICO last year in July at the stone age of crypto world. And now we're basically coming back to our roots at 2030 that originated the Pillar project. And 2030 is a venture studio that launches and acquires decentralized technologies in all their forms to create the products and services that will be mainstream in 2030.
Chris Wray, co-founder and chief legal officer of Mattereum. You've just had a 15-minute intro from Rob, so I won't say any more.
There we go. Thank you. Okay, so the first things first is to hear that. What do you think that like I made my case here half an hour ago. When was it? So I'd like to hear it from you now. That what do you see is the first type of the companies and securities that will be these STOs that will really work, that will make people excited. So now we like want to start the same thing that was hopefully that happened with ICOs, but more for sure will be a slower start, but it will be a big deal hopefully. So what do you see, guys, that will make it big?
Okay, so the current capital markets in the West don't really operate effectively and efficiently for small to medium-sized companies. So if I can give you an example, in the UK we have 638 quoted companies that are valued between 2 and 50 million pounds. And having been a CEO of one of those companies, it's almost impossible to raise money, because my old business was an asset management business looking after your pension funds, your ISAs, your mutual funds. And if I went and bought Mattereum as a quoted company and it doubled, then who on earth is going to buy the shares off me in that small little company? I'll tell you, no one. If it halves, everyone's going to turn, why are you risking my money in a company we've never heard of? So institutions don't want to play in that game. So if we can find a way to actually bring investors, not just in the UK but globally, and give them access to companies like we've seen today, Mattereum and Dome as good examples, that are actually trying to do something in a different way. And don't underestimate the power of changing people's behaviour. And if any of you haven't actually heard the podcast, I'd strongly recommend you go and listen, things on the BBC website, to Nudge, and just look at the impact that's had on the whole world economy. And that is not an underestimation. So if you can actually find ways to change people's behaviour, and if security tokens are a way of doing that by rewarding that behaviour, then the potential is massive.
With your permission, I'm going to take a step back and really look from a macro perspective. From a macro perspective, what we have done since the beginning of the 90s, we have entered a time of massive digitization. We've digitized everything, right? Everything is digital. We're not creating any document today that is not on software. Everything is being digitized, right? Now we're going to go through the same process with tokenization, right? Everything is going to be tokenized. Why? Because we want liquidity, we want exchange, we want transferability, we want tradability, right? And that's the power of it. Now, if you think about it, what we're actually trying to kill at every step of the process is one word: friction. We're trying to attack the friction and eliminate it, because friction creates cost, inefficiencies, ineffectiveness, and that's exactly what we're trying to tackle. Now, securities, coming back to our STO, securities today have massive friction. And it's not so much because of regulations, because the regulations here are really trying to protect the investor. It's about the entire process that you have to go through so many intermediaries that is make the entire thing so inefficient. So when you're tokenizing the entire thing and basically have this wonderful invention called the blockchain, this decentralized ledger that everybody works on and trust, that's the point here, then you can start eliminate that friction. And then you can start bringing and enabling what at the end of the day, what entrepreneurs want. What entrepreneurs want? Being able to raise money faster and cheaper. That's how our what we're doing right now is going to go through the rest of the world. The 99% of the world that doesn't know anything about this blockchain thing. They don't care. How does the pharma entrepreneur, how does the agriculture farmer raise money faster and cheaper? That is what is going to spike innovation. That is what is going to unleash what I believe here around the panel here, and a wave of innovation that haven't been seen since the end of the Second World War. Voila.
Simmer down.
So I'm with Jonny on the scope for small and medium-sized enterprises to, get better than, it's not hard to do better than their current access to financing. But what I would add to that is let's see where we can go around asset-backed, a more fine-grained security for loan financing. It may be equity participation in individual assets. So you're not just looking at a company which has got some loan from the bank. It has some kind of security. It's got a floating charge over the assets of that enterprise. Which are the cases in which being able to single out certain high-value assets and monetize those, perhaps by selling a beneficial stake, alternatively taking a loan on those, secured against the identified asset. To what extent does that free up growth capital for the business? You've still got a productive asset. It's acting as security for finance that you can make productive use of. Do companies need to own all of their assets? No, not necessarily. So if I were trying to coin some futuristic thing, it would be like property as a service or something. Mm-hmm. But interesting. So that's where I imagine there may be some scope here. There's a lot more stuff once we can tokenize everything. Yep. We're going to find efficient
booster for working capital.
Yeah,
kind of,
yeah. We're going to find ways to take advantage of that to get finance that business needs.
Fantastic, thank you. And then, of course, that leads then to the next step. Okay, to growth companies and working capital and all that. So now on ICOs, it's been like Switzerland was the first jurisdiction kind of to go to jurisdiction. Then came Gibraltar. Of course, there's some Hong Kong, Singapore, Malta. So where do you guys see that this jurisdictional thing is super? It's boring, I know, but it's a big thing. That where do you see that now the balance going from where the ICOs happened and where the STOs will happen? Which are the jurisdictions that you like?
I'd love to say London, but it doesn't look that way at the moment, does it? I think you need to be very careful. Again, having been rather boring sort of traditional financial services market, when we tried to launch funds out of Gibraltar, the Isle of Man, even Luxembourg from a UK perspective, investors aren't interested. And my concern about Malta and Gibraltar is that it's incestuous. They all know each other. They all do deals on the nod. They're all involved in the bank, the lawyer, the accountant, and there is a big chance that could unravel. So my concern is that too much money goes into these, they are offshore jurisdictions, and very often they're being set up because they have fairly lax tax regulations more than anything else, and that could actually backfire. So I hope that we'll see slightly more sophisticated centres, such as London, but also looking at places like Singapore. I think Singapore is a very, very interesting market because at the end of the day, that is where the real growth is still coming. I don't believe the obsession that it's nice over the last few months we've seen people constantly talking about America and what the SEC thinks and what it doesn't think. It's a huge market, it's important, but there is a whole world outside of America. So I'd like to think that UK will get its act together, and also we'll see some of the Asian markets step forward.
But in your head, you see Singapore above on a kind of hierarchy from Malta and Gibraltar.
They don't have the talent pool.
Yeah.
They don't have the lawyers. They don't have the accountants. They don't have the finance. It's brass plate land, I'm afraid. I know that won't be popular with some people, but the reality is that to make this market successful, it's not this audience. To make it successful, the audience is a couple of miles up the road. It's city money. They're sitting on $84 trillion. And what we just need is 1% of that money to come into the crypto space, and you'll all be very, very happy investors. And they're not going to put the money into some of these jurisdictions where they've just had issues and challenges in the past. They want deep pools of talent, deep pools of capital. And we've been very, very lucky. The UK has been seen as a trusted place to do business. So, but you know, it's not just all about the UK. I think Asia is a very, very important market, and I know you've got some really interesting plans to go to Singapore. Yeah. Also, now you're looking at Gibraltar and Malta. So sorry to sort of spoil your party.
No, it's important to make it clear that those jurisdictions that we think are the go-to jurisdictions on ICOs, they are not like that anyone would consider on the financial markets to launch anything significant.
Well, I think we're dealing with digital assets, and digital assets I would liken to when you go to the beach, because I'm sure you all remember as kids and making those sort of poodle, sort of sand castles and things like that, and you'd actually go and grab a bunch of sand. Well, I'm afraid I did throw up my two sisters, and then all of a sudden it's not there. It's like trying to grab, when you're brushing your teeth now, try and grab a handful of water. You can't do it. And I think that's the problem the regulators are facing at the moment. If you over-regulate this and push people away, they will go. Because actually we're talking about global digital assets which can be traded and accessible, therefore internationally. And I think that regulators, I won't bore you, but anyone's interested, I've got a really interesting story this time last year talking to the Bank of England of why they were not looking to bring in stronger regulation in the UK. And it all goes back to the Napoleonic Wars, of why they're actually not doing it, because they're worried about if we push it out, then we're going to see other markets step up to the plate. Sorry.
So the jurisdictions, yeah. That's good.
So first of all, to be quite, to be quite fair to the smaller jurisdictions, we would have done the same, right? If I were Maltese or if I were from Cyprus or Gibraltar, I would do the same thing, right? You would try to be innovative and try to compete with what you have, right? It's a smaller jurisdiction, you're more agile, etc., etc. But at the end of the day, you don't have not only the talent pool, you don't have the critical mass. And the critical mass today that London has is just unparalleled. Plus, on top of that, to be quite fair and honest, and you have experienced the same thing in us because we're together in the sandbox. Our approach and the relationship that we have with the FCA here and the UK regulator has been absolutely fantastic. Been responsive, they've been encouraging, they have been listening, they've tried to learn, they are learning from us the same as we are learning from them. So I don't have a lot of, we say regulation, well, you need regulation. If this is security, so, let's, pardon my French, let's cut the crap, right? This is security. And let's treat it as a security and let's be responsible about it as the instrument of security needs to be. So at the end of the day, I believe that London is going to be a big winner, right? I think that because it has the scale, it has the mass of capital, it has lots of these things that are putting, it has the critical mass here from a talent pool to attract. We'll see how Brexit plays, but I don't believe that it will have much effect on that because of the way of the transferability of talent between one corner to the other. Singapore is going to be a big winner. I suspect that Hong Kong is going to be somewhere out there. I fear about what's going to happen in the US because the US, we see the US decreasing. and it's not encouraging. So what London and the big jurisdiction need to be is not, don't scare us too much. If you don't scare us too much, they're going to do fine because they have the critical mass. The smaller jurisdiction need to be much more, exactly, the nimble, the agile, welcoming. Welcoming is the right word as well. They need to welcome us as entrepreneurs, as people that are, because we are shaping, make no mistake, we are shaping the future of capital markets, right? If Goldman Sachs and JP Morgan become something, they don't stay the same type of animals that they are today. They are going to mutate to something that resembles what we are building here.
Well, why are they getting involved in now? They sit.
Exactly.
Yeah, I don't have too much to add to that, but if we are looking at small jurisdictions, I think Liechtenstein's at least worth the mention, partly because it can draw on the talent pool from Switzerland and to some extent from Germany. So it's a tiny place, but it has more skills available to it than its size belies.
Well, Switzerland brings the stability. It brings the stability, even though it's a small country. The stability that it brings throughout the history of not having not having wars, etc. Throughout history has been very, very good to attract those kind of foundations and kind of stability that you need also as part of the protocols. Yeah. Sorry, just wanted to.
And they know they need to try hard, so they are trying hard. So you see in Liechtenstein their draft act governing what's it going to look like when you take real world assets and put them into the legal structures from which they can be tokenized. And they've put some really hard thinking into that. So worth a look.
Exactly, and that's an interesting because I used to trade bonds before, and they were mostly issued out of Luxembourg and Dublin because of the tax treatment. So they were out of those. So in a way, someone who comes from the financial market would say that, okay, why wouldn't now the same thing happen when we start to do that to the securities? Same things should happen because that was especially high yield bonds that were that way.
Yeah.
So then the moving on, and now quick answer from everybody because we can talk forever, right? So how do you see it? Like, of course, ICOs were so powerful because they were basically global retail offerings. Anyone can participate from 200 countries. Anyone with a Ethereum wallet can participate as well if the person is from Pakistan or from Gibraltar or from Finland or London or New York. So do you see that there is that we can do the same with the STOs, that global retail offerings?
Let Chris go first.
Thank you. I think there we're going to need to see some legislative change. So this one is going to require a little bit more patience. It's obviously the direction of travel. I mean, you start to see the beginnings of an attempt to coordinate between some of the major regulators, but that's probably a 5 to 10 year process rather than a 1 or 2 or 3 year process. But of course, in principle, why shouldn't we be able to do this? I'm bullish in the long run, and I think in the short run, it's going to be a bit of a slog.
So to give you a very straight and clear answer, in my opinion, my humble opinion, is that it depends on the instrument.
But let's say equity now.
On equity, not for the short run, you will have the diversity that you had in the utility ICO space. You can't, because exactly. You don't have the same tissue, so to speak, of investors, right? The accredited investors, sophisticated investors, professional investors. Most of them are located between Europe and North America. That's a fact, and it's not going to change anytime soon because again, we're talking about securities. We're not trying to change the security laws, at least not profoundly. What we're trying to change is the technology and the processes that are going to disrupt the capital markets as they are today. So it's not about changing the regulation and changing the legal side of it, at least not in vast majority, the vast percentage of it. It's about really the changing of the underlying technology and how the process is really perceived. So I don't see in the short term, at least, any change happening and any of these STOs going to be massively distributed over, I don't know, South America, for example, or Africa, because you can't sell to those people. The vast majority of accredited investors and sophisticated investors are going to be located between North America and Europe, and growing, growing massively in Asia as well, but it's still growing.
Yeah, understand.
The short answer is obviously no, but with the caveat that I think there's going to be a change in the infrastructure, and it'll be the exchanges that are going to be the gatekeepers, in my opinion. So you'll actually have to go through KYC, AML with the exchanges in order to come into the markets and play and buy and trade whatever securities they're trading. But if you look at what TokenMarket are doing, without giving away too many secrets, if you're actually able to buy and sell in Gibraltar and Malta and Singapore and London, then there isn't. Or perhaps you can't. If you can actually do that in those separate jurisdictions, why can't we see the equivalent of ADSCRs, whereby you're effectively launching the same token on a different jurisdiction? So that actually a token launched in the Maltese exchange, maybe you've got a version of that in the Singapore exchange. So I'm frustrated the market's not moving faster, but I'm amazed when I look back over the last just 12 months, the developments in this market have been truly incredible. Who would have thought that you'd see Goldman Sachs and Fidelity and Microsoft and IBM all embracing this market as much as they have? So I think the possibilities of what happens, I wouldn't say no, but at the moment it looks like very unlikely you're going to see someone looking to spend $100, say in Pakistan, to buy a security token on a company based in the UK.
Exactly, and so that brings then us to that point that the vehicle of investing now on securities, in my opinion, it's, now I want to hear yours, is the stable coins. Because so stable coins now are, all the buzz and everything, but people now like them, in my opinion, some, different reasons, not wrong reasons, but different reasons than I do. Because I see that all the companies, the major companies their shares or bonds or whatever, they will be priced in dollars, pounds and euros. So using Ethereum as a vehicle there to invest requires then all the time conversion rates, refunds. If the deal doesn't happen, will be tricky. Always people will be disappointed on on exchange rates and stuff. So the stable coins will play I'm super excited in next 6 to 12 months on stable coins, because they will be the vehicles that you invest on securities. So I would like to hear your take on stable coins, and I know that I know that you have some interesting things from the oil market. But let's start with Tomer.
So stablecoin are going to be one of the most important elements of the ecosystem within the next few years. And the reason is that we need this stability. The volatility that cryptocurrencies have make it simply impossible to use in high frequency trading, even to buy a t-shirt, right? Going and take the subway, right? You can't go into, take the tube in the morning and pay whatever you pay and pay a completely different price in Ether in the afternoon. It doesn't make sense. So stable coins are going to be very, very important to the ecosystem overall. Now, I want to come back to what you said about the exchanges. There are two schools of thoughts today. The first one is going to be, where is going to be the most important part? Is it the issuer, or is it the exchange? And I'm not sure the exchange is going to be winner, for the simple reason is that by definition exchanges, when it's extremely well propagated, is a commodity. It's about exchanging the mechanism and the value added. The process of issuance is extremely complex, and it's going to take a long time until people like us, TokenMarket, and what Token Factory within 2030 we're doing, is going to take a long time until we really automate the process to make sure that it's extremely scalable, right? And therefore, it's going to be for a long time where I think the value is going to be added. The exchanges, we already kind of see where it's going right now, with Binance and other type of exchanges. We see the London Stock Exchange starting to look in what what's going on in our market. You know, we see NASDAQ is doing experimentations. So we see everything going in this direction, and obviously you'll have T0. All those exchanges are going to have a tough competition with one another, and on what can they beat? On what can they compete? On price, right? So basically the value add that the exchange is going to be a very big decrease into commoditization in terms of the exchange, and the value add is going to be very much for a long time on the issuance side. But coming back to the stablecoin, 100%.
Yeah, I don't have anything too novel to add on stablecoins. I think obviously we'll see more playing around with baskets of currencies with different combinations. You know, it's going to be so easy to do that. Of course, it's going to happen. I think that will be an interesting signal to the financial markets more broadly about views on you know, which currencies are seen as better bets for which purposes. So I think I'm personally interested to watch that. Which kind of weightings do we see among the major currencies that will allow themselves to back stablecoins?
Okay, so very quickly, stablecoins. The two things I think they could impact. One is the biggest asset class in the market. It's I don't know how many noughts in a quadrillion. I'm sure some bright person out there could tell me. But the derivatives market reliably is somewhere in excess of 1.4 quadrillion. And I think stablecoins play a very interesting potential role in that. The second role that I'd just like you to have a think about this one. Can you put your hands up? Have you heard of the Petro? Yeah. Okay. So one or two people. Most people I've spoken to are fairly scathing about it. So we'll just park that to one side. But just think for a moment if the Saudi Arabian government came out with a Saudi coin, because since the 70s the Yanks have actually provided an umbrella. The strong arm of the law to protect them and all the oil reserves. And in return, the Saudis agreed to actually take the price of oil and price it in US dollars, and then recycle the dollars into US treasuries. That's just a fact. It's not me making it up. That's the way it works. There's a few people like the Ruskies and some of the Chinese and possibly the Iranians and some of the other sort of not quite so friendly countries towards Uncle Sam would love not to have to buy dollars to buy oil.
But aren't they working on that already? I think that they are already negotiating with Saudi Arabia to have their own deals on yuan and rubles.
But if that were to happen, then I think that would massively increase the interest and awareness of the very subject we're talking about. So I wouldn't underestimate to see something like the Saudi coin coming out in the next wee while, put it that way.
Exactly. Very good, yeah, that's exciting. So then we go to the last question. So of course now, almost everything that we talk now is about the primary market. So now that we mentioned a little bit of exchanges, how important they are. So now then the tricky thing with exchanges is, and now when we put the smaller companies, SMEs and such on tokenize them and they go to exchanges, the big thing is the how do we like work with the liquidity, market abuse, and all these other issues that you know on the major exchanges, you know, I think that there like just a market abuse. I think that there's 40 different kind of lines of code or kind of things that they have to follow up just on the market abuse. So this will be a big thing for us to turn to very non-liquid. So please answer quickly on about the liquidity. How do you see the future of liquidity, and then how do you see that it is a safe market to invest, that it's not too made by some market makers?
Yeah. I suspect in the short run, the most helpful change we'll see is a creeping up of the caps for crowdfunding. I mean, I think that's the natural way for these jurisdictions to begin to free this up. When it comes to secondary market on companies that have been through those processes, I'm not sure we haven't had that much experience of it as yet. I'm not quite sure what the prospects are for these, relatively speaking, tiny issuances. I don't think I have anything sage to say on it. We're gonna find out. But this is a world in which it will be as easy as it has ever been. In fact, more so, to get much more information about these entities. So it's going to be a very information-rich world. It seems to me that kind of quite dramatically shifts the character of the sector. It will be open to anyone who cares to get pretty well informed about some of these entities, and they, we'll see if that results in a willingness to jump into smaller, not well known, but well documented, securely issued equities. We'll see.
So liquidity is going to, we know for sure, and I think we share the same view here, that liquidity is not going to become gigantic overnight. It's not like, we have to build it up.
Yeah, absolutely.
And it's going to take some time to build it up. No, so what is required in order to build up this liquidity? Let's think like investors. What? Right? I'm buying an equity token, right? Representing a piece, an equity in a startup. What do I need? First of all, I need the trust that it's a safe place, that I'm actually going to get my money back. I can actually redeem it whenever I want. Okay, so there is, that the laws are not going to be prohibitive. Okay, so safe, the safe side of the market, right? And that the technology is there, right? So it's about us as players in this market to ensure that we're building the right tools with the right partnerships in place to make sure that it's actually happening, right? Because if we're not building those tools, then people like you guys, you're not going to invest in this market, right? So it's about us to making sure that, the wallets are easy to use, and the platforms are easy to use, and the KYC is easy to use, and it's actually cheap to use it, and companies, you can attract them, and they can actually raise money at a fraction of the cost, at a fraction of the price. Because again, we are not the market. We are 0.00000% of the market. We're nothing. Where is the market done today? Where are startups raising money today? Well, they raise between matchmakers. You mentioned matchmakers earlier, right? It's about, the entrepreneurs going with their backpack, right, between a VC and another, and an angel investor. I was one of them, so I can laugh about them. And pitching and doing the same pitching. The same way we've basically, since the last 30, 40 years, we haven't changed the way that entrepreneurs are pitching and raising money. So if we, as an industry, we as players in the industry, we're putting the right tools in the right place and the right technologies to make the onboarding process easy for the KYC, for making then liquidity will come. Because investors, what they want is choice. They want choice and they want liquidity.
Absolutely right. Yeah.
How many of you own direct shares? 20%? How many of you own a cryptocurrency? Now I'm talking to sort of the converted. But the reality is, if you go and talk to someone under 30 and ask them to go and open up an account with a stockbroker, there's almost as much chance they're going to leave a voicemail for their dad. They just don't know how to do it. Whereas if you're going to open a digital wallet, the user experience is horrendous. This long flipping private key password, alphanumeric, which you've forgotten as soon as you've actually signed it in, if you're half going, senile, like if you're over 40, 45, let alone 50. So I think it's more about who are the buyers of tomorrow. And the buyers of tomorrow aren't the people that have the capital today. This is going to take some time, and we just have to accept the fact we actually don't know the questions, let alone the answers to some of the problems that we're currently facing. But in terms of addressing, and I think it's really, really important, and something we've been talking to people for the last year or so, is the conflicts of interest between token holders and shareholders. And that's something which many people haven't really bothered to address. With securities, those conflicts ought to disappear because you're aligning the interests. And as you start to see blockchain technology, hopefully the most important thing about it, it creates a degree of trust and transparency. So all the rules and regulations which we have to follow, if they're not adhered to, the actual tokens will be able to stop trading. So if I actually start buying and selling tokens in a closed period, and the closed periods are very, very simple things, can be programmed in, it'll say, sorry Johnny, you're not allowed to. So my trade will just get bounced out. So a lot of the rules and regulations where currently the banks are spending 25% of their cost base on compliance, there is the potential that will go away, that will disappear, because you can automate a lot of the rules and regulations, which to be honest are a nightmare to understand and to keep up to date with. So I think that from a practitioner's point of view, I think that it'll become easier and we'll have less bureaucracy, and I think there'll be some very interesting opportunities, maybe not necessarily in securitization of equity per se, but look at what's going on in the bond market. And if you go and talk to, as we were a couple of weeks ago, Bank of America, Merrill Lynch, and they said, look Johnny, we'd much rather do one bond issuance for Apple for 100 million. But if you could show me a way that we can actually do 100 issuance for 1 million, we've got loads of corporate clients, but more importantly, we've got loads of retail clients that want exposure. Well, there's companies here in London that are actually doing that now, and they claim they can actually decrease the cost of issuing a bond by 90%. So suddenly, all those companies looking around for money can actually now tap the bond market. And that opens up all sorts of really, really interesting opportunities that we wouldn't have even thought about 6 months ago. So I think the outlook is very encouraging, but we've just got to give it a little bit of time and then let the regulators sort of come along with us as we did in the cohort.
Sure.
You know, we're the envy of many, many countries. I was speaking in Lisbon about 4 weeks ago, and they were just saying, you are so lucky to have the sandbox that you've got. And that's been copied by a number of other jurisdictions. And that's great. For the first time, the regulators are listening and they want to embrace. They won't necessarily agree with everything, but at least they're trying, which is great to see.
That was a fantastic ending. Thank you. Thank you, everybody. Thanks, guys. Good panel.